I just want to show you from our view trading around the US election 2016. This is where it all happened. Around here you can see during the night, which was around 1:15 GMT, you can see how the election has resulted in a change on the GBP JPY. We would not be trading at this time because of our rules, and I don't make any exceptions to that rule. But if you were to trade, you can see that it still abides by our rule regardless of what's actually happening. Once it passes the 50 and the Williams 17 is in a strong buy zone, you can put in a trade. And if we were there at 1:15, which we could have, but I didn't want to do that, you would have had a very good risk reward, which is here, 140 points to a 46 point risk. That being said, let's see what we would have done if we went into our trading zone time. So we would have waited until we got to result here. Let's have a look. This is in our time zone now, but you can see it hasn't. Yes, it did pip the 50. This trade would have been a lost trade. Look, can you see it just about pips the 50 there, and it goes into a strong buy zone here. So we would have taken that trade and we would have lost that trade. Let's have a look. We would have taken it around here and risked. That's 100 points. So I wouldn't have done that, because as we have our rules, the rule says anything over 46 points we don't touch. That's the stop loss. So we wouldn't have even touched that, which is good because we would have lost. Okay, we would have left that trade and then we would have went to the next trade, which is here at 12:45. It goes past the 50 quite significantly and it reaches into the strong buy zone. We would have lost this trade too. Let's have a look what we would have risked. If it's less than 46 points, we would have went in. Yep, 41 points, we would have went in and lost that trade. It's not a problem, it happens. Then there's another, it dips under. If you can see, it dips back under and it goes back over. Can you see that here? Look, can you see this? The blue line dips below and comes above, goes below, comes above, is above now, and the yellow line is above in a strong buy zone. So we would wait till we get here. That's it, past the 50 line and is in strong buy zone. We would put a trade in here. What is the risk reward? Let's have a look. That's 50 points. Nope, we wouldn't have touched that then. If that's 50 points, we wouldn't have done it. Nope, it's not 50 points, it's 43 points. We would have done that. We would have taken that trade. We'd taken that trade, and as you can see, this trade takes off. You see how it takes off? And if we put a stop loss after each significant blue or bullish candle, look what would have happened. Stop loss, stop loss, stop loss, stop loss. We probably would have been stopped out here, which is 118 points. 118 points. There's two ways we could do it. One is more riskier, which I've said before in the past, is you don't exit the trade until it passes the 10-day moving average. So if that's the case, we could have followed this up with a loose stop loss. So we just pull it up a bit. Let me show you what a loose stop loss looks like. First stop loss around here, second stop loss around here, just above this here, like that, nice and loose. Next stop loss will be around here, which is when this candle's finished. So it's just loose. Now it's almost one candle behind the candle. So when this candle finishes, our stop loss will be around here. And then when this candle finishes, this blue one here, our candle will still be just a bit higher, maybe about here, because as you can see, it's almost the same here. And then when that finishes, we would put it around here. We probably got stopped out there, or we have a manual visualization and just wait until it passes the 10, which is around here. This is actually when it closes below the 10. So if we see how much we could have risked and benefited, we would have come out there and we would have come in on this candle here. That's 210 points. 210 points with a 43 pip risk. Fair enough, we would have lost, I think it was 20 pips around here, but that happens. It happens all the time. And most of the time when it's correct, once these things are correct, it aligns correctly, this usually means there's going to be a big rally or a big sell-off. It usually means that. So if I get pipped out here, I'm kind of not happy, but I'm anticipating a big move, because it's almost saying, I want to do it, but I just need a bit more time, and then it goes. So there's two ways to do that, really, if that's the case, because this happened to me last week as well. So what we could do, thinking off the fly here, is if we do see this, we can give it a looser stop loss. If we put the stop loss just a bit looser than that, if we put it below the last bullish candle, which is below the 10, if you understand me, which is this candle here. So if you come in here, right, you come in on this candle and you put the stop loss not under this candle, right, but under the candle which is below the 10, which is this one here, we're in. Let's have a look how much you would risk. 63 points. See, that's it's a bit too much for us, but additionally it works out, but it's a bit rich for us, so we wouldn't do that. But it's worth thinking about. Maybe we can develop some sort of strategy which we can come up, which adheres to what we do, but gives us that bit of a stop loss gap, because we do know it does happen that way. It happened, the same thing happened last week. It pipped me out, and then I had to go back in. It took 23 points off me. Then I had to go back in and it rallied just like this, and we made our money back. But we lost 23 points. So we made, I think it was on average, I think we made 33 points or 35 points after subtracting the losses. But if we done the maths properly, with the stop loss, we might have done a bit better. But that's another video anyway. But yes, so that's what we're talking about. So when you're trading with the elections, irrespective of what's going on in the night or whatnot, just trade normally and you still can make your money. Don't be wowed by the lights, because it's happened to me before. I traded when I was groggy in the middle of the night, and I won a significant amount, and I gave it all back because the strategy, there was no strategy, nothing. It was just, it was almost like gambling. You don't want to gamble. You don't want to gamble. Gamble is 50-50. It can go either way. We don't do that. So bear that in mind the next time you trade. You see that a nice significant event, don't get wowed by the lights. Just do what you do. Wait your time and make your trade.